Have you ever stared at a price chart and just seen a chaotic mess of lines going up and down? Well, you're not alone. Today, we're going to pull back the curtain and decode what's called market structure. It's really the language of the charts, and once you get it, everything starts to make a whole lot more sense. Let's dive in. This quote pretty much says it all, doesn't it? Understanding which way the market is heading isn't just a good idea, it's about survival. You can think of the trend like a powerful river. If you swim with the current, it's easy. But if you try to fight it, well, you're gonna have a bad time. So the million-dollar question is, how do you know which way that river is flowing? All right, we're gonna start with the absolute basics. Forget about fancy indicators or drawing a bunch of lines all over the place. We're gonna look at pure price action, just the peaks and valleys on the chart. That's where the real story is. At its very core, a trending market really only does two things. It either goes up or it goes down. Simple, right? We call these uptrends and downtrends. And the secret to telling them apart is all about keeping an eye on the market's highs and its lows. Now, an uptrend is never just a straight line up. It's got a rhythm to it, kind of like it's climbing a set of stairs. You'll see the price push up to make a new high. We call that a higher high. And then it pulls back a little to form a higher low. And here's the key. That low is higher than the last one. When you see this pattern repeating, it's a huge sign that the buyers are in charge. And you guessed it, a downtrend is just the reverse. It's like going down the stairs. The market pushes down to a lower low, then tries to rally but can't quite make it back up, creating a lower high. This pattern tells us a very clear story. The sellers are in control, and every time the buyers try to push back, they get shut down. Okay, so spotting a trend is pretty straightforward. But here's the thing. No trend lasts forever. The real skill where the money is made is in knowing when that trend is running out of gas and might be about to turn around. So how do we spot that? This is the term you need to burn into your brain. Break of structure. Or you'll hear traders call it BOS for short. This is your first major clue that the whole game is changing. It's that moment where the nice, clean pattern we've been following suddenly gets broken. So let's get specific. Remember how in an uptrend, that series of higher lows acts like a floor, holding the price up? Well, the alarm bell goes off the second the price smashes through that floor. It breaks below the last higher low and makes a new lower low. That right there is your signal that the buyers are losing their grip. The trend might be over. But here's where it gets a little tricky, and honestly, where a lot of new traders get trapped. Not every little poke below a key level is the real deal. Sometimes the market is just trying to fake you out. So how do you tell the difference between a real break and a fake out? It's not about where the price went for a split second. It's all about how the candle actually closed. And to see that, we've got to look at the candle itself, the body versus the wick. A true confirmed break comes from the candle body, the fat part of the candle. When you see the body close firmly on the other side of that level, that's conviction. That's the market basically saying, yep, we're not just visiting this new price, we're moving in. It's a strong signal the move is likely to continue. A fake out, on the other hand, is all about the wick, that little thin line. What that wick tells you is that price tried to break the level, but it got violently rejected and snapped right back. This is often a trap to grab orders from people who jumped the gun. When you see a long wick like that, it's not a sign of a break. It's a sign of rejection, and it often leads to a fast move in the opposite direction. Now let's talk about what is without a doubt the single biggest and most costly mistake beginners make with market structure. I promise you, once you understand this one concept, you're going to save yourself from so many bad trades. So first, you need to get that any trend is made up of two different kinds of moves. You have the impulse move, that's the strong, powerful push in the direction of the main trend. And then you have the corrective move. That's the smaller pullback where the market kind of takes a breath before its next big push. So if we know the main trend is up and we know these big impulse moves are pushing higher, why on earth do so many people get caught trying to sell? What is the trap here? And here it is. This is the trap. Inside that little corrective pullback, if you zoom in, it looks like its own tiny little downtrend. We call this internal structure. New traders see this, they think, oh my God, the trend is reversing, and they start hitting the sell button right before the real, powerful trend kicks back in and just runs them right over. It's such a classic mistake. You're confusing the little ripples on the surface for the main tide underneath. By trading that internal noise, you've jumped the gun. You've bet against the main trend before the market has given you any real signal that it's over. Okay, we have covered a lot of ground. So let's bring it all home and boil everything down into 3 simple core rules that you can take with you and use immediately.
Here they are. It's this simple. Rule number 1, always know the main trend. Are we making higher highs and higher lows or lower highs and lower lows? Rule number 2, be patient and wait for confirmation. A wick is not a break. Only trust a break when a candle body closes past that level. And finally, rule number 3, learn to ignore the noise. Know the difference between a main impulse move and a small corrective pullback so you don't get caught in the trap.
So next time you pull up a chart, you won't just see a bunch of random squiggles. You'll see a story of buyers and sellers, of trends holding and trends breaking. You now have the basic grammar to read that story. So the only question is, what story is the market telling you right now?